Okay guys, we're going to look at USDJPY. Why? Because I called it out in the morning call that I do, which should be up any time now, is one of the best markets to look at. The question here is it a good market to trade? It's certainly on the strongest and weakest, but let's have a little look at it, shall we? We can see it's pushing down at this moment in time. However, I've done an analysis on it, and it doesn't really have a clear trade, although it is a bear market and it's selling. So therefore, okay, I can kind of go with that. But let's have a little look as to what it's pulling against. Well, it's actually pulling against this move. We can see we've got momentum running this way, and this is closing in. So indicators are not doing us a great deal of favors at the moment, but this is. All right. So what I can see is what's called a classic Kylie formation. It's coming in right now on a level, which is here, which is there. And what we want to do is place an order on this pretty much pronto, which is what we're going to do. So just a couple of pips underneath, bash, just like so. Take this over into a 5-minute chart. There it is there, and we're just going to drag it up to the last swing point, which is here. Okay, you see that? Just there. Now, the idea of this is we're looking for it to shorthand by breaking this level, which is up there. So we'll kind of just drop this in as well. So we'll drop that there. Change these colors round to blue. Now you'll see that I've got the price away from, or the order rather, away from the current price. Okay, there is method in the madness behind that. All right, I'll explain it in a moment. So I'm going to turn that blue as well. There we go. All right, now what we can see, it's come down, it broke the level. Right, that's what's called showing its hand. Now the next part of it is, how do we know it's confirmed? Well, if it breaks the swing, that means this range is breaking out. Okay, if that's the case, where's it going? Well, the next stall point is there, so that's about 25 quid. Okay, but let's have a little look, see what it looks like as a target. Well, it's a C trade, but it's an unknown C trade. That means it's a variable because the dominance is buy. 8. Well, if you're a little bit unsure, be a little bit cautious. So I'm just going to go to the next level. Simple stuff. If that gets a bit higher, I can get the price a bit better up to there. Superb. So that's the premise of the trade. It's a very simple trade. It's an easy trade. Now, what does that do for you? It gives you structure. Because, let me go through it again. You can see a strong drive. Right? Now there's drives inside a drive. So there's a strong drive and it retraced. There's the next strong drive and it looks like it's trying to retrace. Right, okay. That's what we're looking for. Well, why did that turn at that point? Dead simple. Drop an extension on. Top to bottom. Just like so. And then you can have a look at the criteria. Well, I'll just draw a couple of lines on. There's your 50%. It's what you always look for. Well, it came to 50%. It's rejected it. In other words, it doesn't like that particular move, and it's going to continue. Well, it's continued up to there. The next key turning point on an expansion, if you can pick out an area, is the 127. Well, fuck me in a hell cart. To the pip. Straight back down. It'll now look to revisit the levels. but this level is now in play, or this move is in play. So therefore, that's what we go for. We can see it's an upward shift. So what does that tell you? Well, it tells you to be bloody careful on a pullback if you're going to trade it. Because the dominance, just looking at this, is to the higher ground. What's a 15 minutes show you? Well, it just shows you're a little bit more clean. There are 3 parts to a fib. Let me sort of zone that out. So you find the low, the high. If I zone this into a probability, there's a danger zone. Okay. Duplicate that. There's another danger zone. And then in the middle, what you have is a series of levels that you can work with. Now, when you're looking at it like this, and you've actually broke it down, it's as clear as day. You don't trade in the red zone because it's dangerous. You don't know what's going to happen. You need it to show its hand, so it has to close outside of it, which it has. And then you want to see if it's going to continue, which is the break of the next swing point, which is here. And then you just look to see if it comes down. So you've got the drive, the consolidation, and then you're now looking at the move. Now, once you're in it, you can go, well, okay, I'll stage till I'm wrong. Well, where am I wrong? It's already told you where it's wrong because you've marked it out. You can stage all the way up to there, but if it breaks through, you've got a problem and you're going to have to do something about it. And that's when you're wrong. So the premise of this trade is dead simple. Now, what we're going to do is we're just going to play it out, and then I'll explain a little bit more about the trade as to why you have your target a certain way, why your stop is in a certain way. Separate the two. Let's see what happens.
Well, we watch and wait.
Just a very quick interlude to the video. Do you like the way I trade? Are you interested in how I read the markets?
Hell yeah!
If you are, why not come along to our Discord group? You'll see me talk to the guys. You'll see all of the extra videos that the memberships provide. And if you really want to get into it, go to the website and you'll find all of the modules listed there and ways you'll get those modules for free. So as always, guys, do what you love and the money will follow. Let's jump back to the video.
Sell.
So guys, that's done. Done exactly what I wanted. It's gone down into the key level, allowing it to push through. Will it go any further? Possible. Is it wise to hang on to it? It's kind of debatable because the general trend of this market was up. However, the bigger picture, when I was looking at this, was down. So the big picture's down. It's currently selling. So I had to decide whether or not it was returning to trend or whether it's going to go into this. I decided to take the sell as a quick snap because it was showing me what was going on. And this sections here gave me the arenas in which to work in. So all I have to do now is just make certain I've got no tickets. So you take your tickets off. And there you go. So we started looking for about 25 quid and we've ended up with 65 quid just by staging and planning these things out. Now, look at what's happened when it's come here. It's bounced straight on it. So it was actually targeted correctly. Now, the next part of it is, well, what if I got it wrong? Well, I got it wrong when it breaks up here. So therefore, your whole decision area is from the point of where it shows its hand to the point where it's wrong. You can enter anywhere in and around this area. If you enter in and then stage up, not a problem. Breaks out of here, you've got a problem. If it moves up, picks some orders up and then comes back to area, what you've done is you've increased your upside. But because that stop is a lot tighter than what that one is, you reduce exposure. So it's a simple, clean way to trade. In fact, it's a clever way to trade, because what you're essentially doing is you're spreading out your risk in the sense that you're not going 100% to market at once. If you do, you've got nowhere to go and you're always adding to a trade. If you break it up, well, you're just spending your money more wisely, that's all. And if it all goes pear-shaped, well, it would have went all pear-shaped if you're 100%. So you just got to weigh the pros and cons. Now, if it runs for you straight away, fine. Just means it ran for you straight away. I wouldn't worry about it. If you're doing it over and over and over and you're nailing it on the head every single time, go 100% to market. If you're not, spread the cost. Simple as that. So there you go, kids. I do this every single day. Even told the guys in the squad, if they look in the write-ups in the area, I was trading this, called it out in the morning call, 7 o'clock this morning. It's currently 10:30, well in advance of what I'm looking at. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one. I hope you enjoyed that. If you did, why not check out one of our other videos? They're kicking around here somewhere on the screen. And also come along to our WhatsApp group. What you'll see there is what I'm up to during the day. I'll work the strengths out for you on a morning to help you pick a pair. And also little news updates throughout the day. And also write-ups of our live meetings. And if you want to come along to our live meetings, drop on the website and you'll find all the links of how to come along and get guest access. See you all in the next one.